Thank you for watching this brief market update video. Despite some equity market volatility in April, the month of May has more than recovered the April declines. April showers spring May flowers, right? And just the other day, the Dow Jones Industrial Average, or Dow, set a new all-time high and closed above 40,000 for the first time. The Dow index includes just 30 stocks and is weighted by stock price, not by market value, which is a more common methodology. So most of us look to the S&P 500 as the go-to gauge of U.S. large company equity performance, making that index the de facto market benchmark. But I would argue that the Dow Jones Industrial Average is still the world's most widely recognized equity index, and its move above 40,000 is more than just a symbolic measure. You know, the Dow first hit 20,000 in January 2017, a little more than 7 years ago. The index reached 30,000 in November of 2020, and now more than 3.5 years from that date, we saw the 40,000 level. And that's despite navigating through the COVID-19 pandemic. So the Dow has joined both the S&P 500 and NASDAQ composite indices setting new highs, and in 2024 through late May, more sectors are participating in gains. The strong returns are not exclusive to the US either, especially in Europe. MSCI's most widely followed developed market index has also set a record. You know, in 2024, we've argued that narrow participation in market gains could limit the potential for further equity market increases, and we'd like to see broader participation. With the Dow and other indices breaking out to new highs, markets may be addressing that concern. Investors are buoyant. Economic growth and earnings have been solid. Inflation trends moved lower in April after ticking higher in March, and spending on artificial intelligence represents substantial capital investment. That's a lot of good news, but data can have hiccups, especially if consumer trends weaken or inflation gains stall. It's not time to become complacent, and we would manage portfolio exposure, rebalance positions as needed, and remain diversified. Good news creates high expectations, and those high expectations create potential for disappointment. For specific recommendation and strategies, please contact your D.A. Davidson financial professional.